Go ahead, Paul.
Okay. Well, thank you for joining, everybody. It's a smaller attendance today, but we'll start. So this lecture is going to be about hypercubes, and just a little bit of what I've been playing around with, and it's not going to be a long lecture. The ones that don't know me, I'm an author and a lecturer and proprietary trader, and probably 2 or 3 months away from getting my doctorate. So I'm finishing up on my dissertation. So the stuff that I've written is about complexity science, behavioral finance, dynamic hedging, statistics, and chaos theory. I come from a chaos theory point of view with the market. I lecture about economics and finance, and I trade the energy and currency markets, primarily oil and natural gas. And then my dissertation is using receiving horizontal control and stochastic programming and dynamically hedging the oil and currency markets with that. Some of the books that I've written are Chaos Theory and Economic Emergence, which is about developmental economics, behavioral finance, and complexity science. Black Box, The Alchemy of Finance, which is my statistics and research design in quant finance. And Escape Velocity is my book about risk management. The last 2 chapters is about dynamic hedging, and the first chapter is about corporate finance. You can reach me at my website, which is www.thestudioreykjavik.com, or Twitter. My handle is Paul Cottrell, and you can subscribe to my videos on YouTube. The other 2 books that or actually 3 books that I'm working on, Surface, The Volatility of Volatility, which will be hopefully out by the end of the year, and that'll be primarily my dissertation and my perspective on volatility graphing. The Market Armor is going to be about complexities, about chaos theory and complexity science and topographical finance, more at an undergraduate level, while my other books are more at a PhD level. And then I'm doing research right now on artificial intelligence and virtual reality using what is considered artificial general intelligence, whereas a lot of the artificial intelligence that's out in the public domain right now is more narrow AI. I'm focusing more on general intelligence. All right, now the meat of this lecture. What is a hypercube? Hypercube is a piece of geometry that has n dimensions, and the simplest one is a cube. So that has three variables or 3 dimensions. And a tesseract is a 4-dimensional cube, and it can be viewed as a cube within a cube. So you can see here that there's a cube inside, and then outside is another cube. And those 2 cubes are connected by side cubes that are somewhat skewed, more like a trapezoid. So this cube, in a 4-dimensional cube, has more information in it than in the normal 3-dimensional cube. 3-dimensional cube will only have 3 dimensions. 4-dimensional cube will actually have 4 dimensions. So the information that's in this is in the inside of the tesseract, and then another variable is this leg here of the tesseract. So you can view this comes out of mathematics and some physics type stuff, but I'm trying to apply it to finance. So there's other types of hypercubes, and it starts obviously with a cube and 4-dimensional cube, but it can go into many different dimensions. dimensions. And if you're thinking it as a heuristic, as a cube within a cube, for each additional dimensional cube. So you have a cube within a cube, within a cube, within a cube, within a cube, and then you can see how it just kind of multiplies, kind of exponentially into a variety of many little cubes. But today we're just going to kind of focus on the tesseract, the four-dimensional cube. But just to keep in mind, there are such cases where systems could have a 12-dimensional cube. So, to give an example, hopefully this does this. Here. I'll hypercube this. Hopefully this plays out. If it doesn't, then I'll have to go into another web browser. So this is the problem. Always wants to use the Explorer. We're going to show us a video of a hypercube growing. This thing works here. And it does that. The problem with doing the net meeting, sometimes when you do a lot of graphic stuff in the background, it goes slow. Okay. So. Yeah, this is going too slow. Okay, so this should show a video on how Pebbles moves. Hopefully you're using this. But it's almost like when it rotates, it's almost like a box moving in a box. It is as you're looking at different angles. So it has very unique properties compared to the cube. That's the thing here. Is that by changing a certain perspective in the tesseract, that you can see different aspects to a system. So that's kind of the point of the video here. I had a couple others that showed going from 1 dimensions all the way to 10 dimensions, but the link isn't working. But maybe after I close some of these files, I can show you at the end. So basically, by seeing the video and how it's moving around, the whole intent of the hypercube in finance is the realization that the markets are much more advanced than just 3 dimensions, and that they're, to be not fully described, but at least partially described, you need more dimensions. You can't just mention it using price and time. People that have seen some of my lectures, I also view things in volatility, so that could be a third variable, but I know that the market is far more complex than just 3 variables. So you have to look at things in a hypercube. So if 3 variables are not fully described in the market, you need higher dimensions. And we can we can get help from looking at it closer by understanding the dynamics of the financial system, by adding more dimensions. Price and time is not enough, as I mentioned, and to understand the financial markets, we're going to need to see more variables. So we usually use multiple indicators. This is why technical traders on their price charts have a lot of different indicators. And the indicators could be the moving averages, Fibonacci's, or the strength indicators. And so on a normal technical chart, you're seeing a hypercube, and most people don't even realize it. But it's in 2D, and maybe it's easier to digest for some people. But I like to look at things in 3 dimensions. It seems to flow easier for me. So the point here is that people in trading are using hypercubes without even really realizing it, because their price charts have more than just time and price. They have multiple indicators. And the more indicators you have that are a new variable on that chart is an added in-dimensional cube. So in quant models, it's possible variables are time, price, drift, volatility. I use jump diffusions, correlations, and other such type of indicators or variables. Now, traders here need to visualize multiple variables of the market, and this is what I call market telemetry. Now, a simple example is the standard technical trader price chart, where you have the price, you have the MACD, and you have the RSI. So that's some standards, but you don't see volatility. Yeah, there are some volatility charts that can be added to the price chart, and probably some people that trade that are even on this conference call, have some sort of volatility metric on their price chart. So they're kind of using hypercubes in prices, but I think there's a better. And this kind of leads into what I've been developing with my Poseidon software. So hypercubes with higher dimensions, using the Tesseract example for finance. The inside cube I consider as volatility, price, and correlation. And I pay attention to see if anyone's asking questions. So volatility, price, and correlation is the inside cube. So that's your first 3 dimensions. This is kind of the core of what I'm doing with Poseidon. So it's taking market data and it's graphing it 3-dimensionally using volatility, price, and correlation. And then when you add a 4-dimensional cube or a Tesseract, you are adding time here. And you can see that's your 4th dimension. And then with that, you have a moving surface with time relative to the 3 variables that you're using, volatility, price, and correlation. So it's kind of moving through time, similar to the optical illusion that you saw in the video. that cube is moving, it almost seems as though it's moving out of itself and only to be snapped back into itself. Now, what's interesting about the hypercube is that it projects. There's multiple cubes in the hypercube, right? You have the inside cube, you have the outside cube, and then you have these skewed cubes for each side of the big cube that are connected. So you can see that this face here, this is not face, but this side, the volatility side, is the same variable side as this side. So this face, this face, this point to this point to this point to this point is what I call a hyperface. It makes the part of the hypercube. So a hyperface, this face here, is volatility, price, and correlation. While this face, the inside cube face, so this point here, here, is also volatility, price, and correlation. But it just so happens that it's just looking at. Let me try to be.
Hello, when you want me to help me, let me know. I need to use this phone.
See. Okay, hopefully the feedback stops here. Okay. So the point I'm making here is that this face here, this face here is the same because you're viewing it in this angle, the same projection as this. Collapse, taking time out of you're collapsing in that view. Now, if you want to look at that another three-dimensional representation of this trapezoidal part of the hypercube, then you would be looking at volatility, time, and price instead of just volatility, price, to correlation. So this front cube, this front trapezoidal cube, right? It goes from here to here. Has volatility, price, and time, not correlation. Now, if you go on this side, the right side of the hypercube, then you're talking about correlation on the bottom, right? Volatility on the z-axis, and time. So you can see that by playing around with the different sides of the hypercube, you're playing around with different variables that are described within this four-dimensional space, this four-dimensional hypercube. But again, you can make it much more complicated. You have 5, 6, 7 dimensions, but it's hard to graph that or show that. It's hard to visualize it. Now, the idea here with hypercubes and hyperfaces, with hypercubes you can have different permutations of the variables that you're looking at. For example, you could be looking at correlation, price, and volatility, or you could be looking at correlation, time, and volatility, or correlation, price, and time, or a set of other variables that you may think are important within the center cube. It may not be price, it could be actually drift. A lot of times I like to understand the direction of the drift instead of the actual price for momentum trading. So to replace price, you could also use drift, which is similar to how Black-Scholes model is modeling options. So on a hyperface, you're dealing with only two variables, because it's two-dimensional. And you have correlation price, correlation volatility, price and time, which is your normal price curve that you use for trading. and volatility prices. So you can kind of see how, at least through writing it down, what type of variables are actually represented in this hypercube. Now, here, this is a graphic that I did during a presentation with Brian a few months ago, I think. And this Thinkorswim on this side, this is the trade platform I use. And I don't remember what this was. I can't read the columns here, but it might have been S&P or maybe it was oil, probably oil. But on here you have the price curve, you have some moving indicators, moving average indicators, they have volume here, you have MACD and the RSI, and then you can see the market in 3 dimensions, similar to this hypercube concept that I was talking about, right? It's hard to see volatility on this price chart, but I have graphed here the volatility relative to the drift. I forgot what the drift window was. It might have been 10 periods, it might have been 5 periods to figure out the regression. And the date, I guess this is drift here and date here. So this 3-dimensional representation of the market is a one cube within a hypercube of the economic system that I look at. So I have a drift here, I have volatility here, and it's showing a relationship between volatility drift relative to time. I could have had drift correlation and volatility and have a moving surface relative to time, and then it would be a true test effect. So that's one way to look at the that's one way to look at the the market. Now, before I answer any questions you might have, I just wanted to show. This is my website here that you can take a look at my blogs and stuff. But the real point that I'm trying to make here is the blog here. Created software. Hopefully this thing looks up. And called Poseidon. And this software Poseidon this is my front screen here. And what it does is it graphs the market in 3D, similar to some of the other presentations that I've done, where it's reading market data, or you load in historical market data, you can analyze it. So I'm doing an introduction of this software, and then software releases it to the public for purchase, but I'm in the process of making it. Now, the video that I want to show you is tied into using hypercubes, but using virtual reality instead of a flat screen. And part of my Poseidon software is going to have a virtual reality component to it. And I do a whole bunch of lectures on different things, different topics. Lately, I've been talking about artificial intelligence. You always see lectures, and hopefully you subscribe to it. But this video that I'm going to show you is a demo, if you haven't seen it already. All right, this video is going to show you the concept of using hypercubes in a virtual reality situation. Now, I have the Oculus, so I'm testing the Oculus with my site software. The Oculus is a head-up display virtual reality. And what happens is you're walking in this virtual world, and this is just a demo concept. This is a proof of concept. But basically, what's going to happen is that the sideways parameterized surfaces will be shown on these different faces, either a screen, like a one-dimensional, a two-dimensional screen, or on these cubes that are floating in this virtual world. And the idea is that you can have a lot of these cubes or a lot of these two-dimensional screens and look at the market telemetry in real time. And but I have to do a lot of ergonomic studying and positioning to make sure that it all works smoothly. I'm using Unity 3D as my graphic engine to be able to make the virtual world, and parameterization the surfaces are coming from code that I developed in MATLAB. So basically, what's happening here is it's going to have these cubes, and it's going to have different hyperfaces on the cube showing two-dimensional or three-dimensional information based on whatever I think is important for that particular commodity or that particular asset. So I could have an oil cube that's floating in the air, and I can have, let's say, the S&P 500 cube floating in the air, and maybe, let's say, the Euro USD currency cube floating another one in the air, and I'm rotating. I'd be able to rotate in the virtual world and look at the different faces of the cube as it's moving in real time. And the market is getting updated by the streaming data. So that's the intent. And then the idea is to say you could get some news feed that's actually populated in the air, showing the news feed. The idea of this cube here is to be able to look down and see a three-dimensional surface instead of it being projected on a face. You'd actually see the three-dimensional surface and move around the three-dimensional surface. And the big screen here, this is all white. The idea there is that you'd be getting video feed or something. Either something that you want to play that was recorded, or something that it's a live feed to. But the idea here is that you can apply the concept of hypercubes, put it in a VR world, and you can walk around and see the telemetry of the market and make decisions. This is one visual tool to use for big data. Another concept that I've been thinking about, but haven't programmed it, is using virtual reality for looking at big data relative to systemic risk. You can imagine having these nodes that are in the virtual world, and it has different connection points to different other nodes. And the strength of the connection may be the connection to systemic risk. By looking at the systemic risk in a traditional way in the virtual world, you have a better understanding of how counterparty risk is evolving through time. Now, this is really more for risk managers, that kind of concept, but it could be applied for other things that have similar need for informatics. So that's kind of a concept that I have for the virtual world that you walk around in. I'm just experimenting with it right now. There's, again, a lot of ergonomic studying that has to take place in the size of the moving character relative to the position of the cubes in space. to be able to read it well. When you're wearing the Oculus, you don't see the two screens, you just see one big on your in your eyes. You only see one big screen because of the stereo effect. Now, what I wanted to show also, before I take any questions, is this is going to, once you go to the login screen of Poseidon, it'll go to a menu screen. Now, people that are familiar with the Bloomberg station, Bloomberg terminal, I'm making Poseidon to have a similar GUI system as the Bloomberg terminal. And then you would have basically 12, well, actually 11 screens, real screens, and a help screen, so 12 screens. So what would happen is that you'd be able to either type 1 here to go to the equity screen. You could use the mouse and click equity, and it would go to the equity screen, or hit F1 and go to the equity screen. And that's true for all of these. This would be F2, F3, F4, F5, or you could just type in commodity, which is this right here, which is similar to Bloomberg, and it'd go to the commodity screen. And so the screens that I'm going to have is the equity screen, the commodity screen, the government securities, which is going to be primarily U.S. Treasuries, some government, some foreign bonds, sovereign bonds data, but not much. Now, currency will have a whole slew of different currency pairs. They'll have indices, world indices for stock markets and other type of indices, money markets. This is going to be more of the front end of the yield curve. The quant tools that I'm going to have in Poseidon is going to be the concept that I have is Poseidon is not going to trade. What it'll do is it'll create trading signals, and that could be ported into an algorithmic trading platform. Or if you're a manual trader, this would be next to your trading system. And as the system is generating a signal, based on the parameters you put in, using whichever quant model that you choose from the menu, then the idea is that, if you're a manual trader and Poseidon, based on your parameters that you put in, says buy, then you would hit the buy if you want, or it could feed that signal into one of your algorithmic trades. Charting. So some of what I bring to the table in terms of Poseidon relative to other packages is this quant tools. These tools that are going to be in here are not in MATLAB. These are more advanced level academic quant tools that you would be able to use those functions. Charting is another aspect that I think is the core of Poseidon, and that's obviously the volatility modeling, the hypercube modeling that I was talking about, looking at things in 3 dimensions and 4 dimensions. Obviously, there's going to be a news feed, the virtual reality component that I showed you earlier, the idea that if you don't want to see things in a 2D screen, normal screen type scenario, even if it is showing 3 dimensions, and you want to see it in a virtual world, and you have virtual reality equipment, you'll be able to do that, and then it helps. So that's basically what I've been developing, for Poseidon, and the concept of these hypercubes. So now, since I've pretty much concluded my prepared statements, I can take any questions that you have.
Paul, can you hear me?
Yeah, I can hear you.
Okay.
It's a little soft. It's hard to hear you. Maybe if you turn the volume up a little bit.
Okay. Can you hear me now?
Yeah, it's better.
Okay. Anybody got questions? Just type them up in the chat box. I mean, we got 11 people. Anybody? Who's got questions?
This is kind of advanced stuff, and it's this is a lot of people don't have the head-up display and, virtual reality, data gloves and stuff like that, but I really do believe that as time goes on, that's going to be a much more common thing, especially for gamers and people that are trading are going to see the benefits of using that type of equipment. Now, Poseidon isn't completely focused on virtual reality. It's also focused on, your normal 2D, representation on a desktop or a laptop. But inside of Poseidon is the ability to see things in virtual reality.
Well, it is something leading edge, that's for sure.
Yeah.
I'm just typing here. Don't be shy, everybody. If you got questions, I mean, someone's gonna have questions, no? Anybody? This is a first, isn't it, Paul? No one with questions?
Yeah.
Bizarre. Everyone can hear us, right? Everyone's awake? Just type a yeah. Oh. Okay, here's our first from Steve.
My stereo demo was just the right size on the HD screen, but it was still fatiguing to watch for 10 minutes.
I don't know what that means. I can unmute Steve if you want.
Yeah, I mean, yeah. Oh, do I have to unmute him?
No, it's at my end. I think we can do. It's referring to Poseidon 3D. Can you speak, Steve? Just type yes or no, and we'll put you on the. I'll meet you, and if you want to verbalize your question or comment. Oh, yeah. Steve, you're unmuted. I guess, Paul, you did that, right?
Yeah.
Okay, good. You have the... Can you speak?
The whole point of that, the whole point of the demo that I had was just to show a concept of it. When I was recording that, I actually had the head-up display on. And I was actually physically moving my head and moving my body relative to the positional camera that I have as I was moving in that virtual world.
I don't know if you can read, but George just put up a question. If you can use Features ES, for example, on the Poseidon Live.
Poseidon Live using Features ES. No, right now I'm building up the GUI system for Poseidon, so I can't show you that. I do have two versions of Poseidon. One's called Poseidon Lite, which is it'll take any data that you want, and you use Excel, and you paste that data in Excel, and it'll graph the data in 3D. So if you have the data that you want to graph, a lot of people will want to graph, price, time, and something else, whatever it is, correlation to something, whatever. But if you have that data, then you can just paste it into Poseidon Lite, and it'll graph it and show that statically, and you can rotate that static surface. That's free. I'm going to keep that as free for everybody to use if they want to play with it. There's also the what I call the beta version of Poseidon that goes into it's much more advanced what's going on in that, and it's showing the PDF and the CDF functions of the actual surface that's being graphed. Now, the examples I have are using the oil market, the currency market. I think I had a bond market one also. It was a little while ago once I had it. Now that's also free download, but after the 15th, I'm taking that down. But I'm going to keep the Poseidon Lite for for people that want to play around with stuff in 3D and see how they could use it for their trading. But in terms of figuring out how to use statistics with the Poseidon surface, I'm going to take that down after the 15th, because that's going to be part of the core of the commercial product. Now, again, I'm coding this for Windows 7. There's a problem with my version of MATLAB being able to port out some of the functions that I'm using for Windows 8. I know the solution and how to fix it. The problem is that I'm in the middle of my dissertation and I do not want to upgrade my MATLAB right now because everything that I did for my dissertation is in a certain version of MATLAB and it's not worth, chance of blowing up my system when I upgrade. So, but once I finish, then I'll start coding for Windows 8.
Anybody else got any questions at all? Comments? Oh, what about Steve's question here?
Steve's question.
Well, he was referring that your stereo demo was just the right size on my HD screen, but was still fatiguing to watch for 10 minutes. He's referring to Poseidon 3D. He's making a comment on that.
Well, I'm not sure what you mean by fatigue. Maybe because it's going slow. I'm not sure.
Could be his web connection.
I'm not sure. I'm not really sure what he means by fatiguing. I mean,
probably lagging.
Fatiguing on his eyes, fatiguing intellectually, fatiguing for the hardware.
Oh, he says you already explained it.
Right.
You're using a head tracker. Yeah, that's why.
Yeah. Yeah, I'm using. I have the Oculus. I have the Oculus DK2, so it uses the tracking camera. And another thing is that I was playing around with the movement within Unity 3D. You can play around with the speed of the movement of the person. That's, the camera, they call it the first person, but you can change your moving variables, right, left, forward, and back, change the speed, kind of like, having it walking or running. So I was playing around with, I had a movement forward actually at a different speed than the movement side to side to understand the differences.
Sharon's
When I
got
was doing the experiment.
So Sharon's got the comment of what the change in colors mean.
What does the change in colors mean? Oh, on the surface. In Poseidon, there is a gradient bar. You don't see it on this chart here, but there's a gradient bar here, and the colors represent what region in Z, whatever your Z variable is. So in this case, this is volatility. So these colors here are a certain range for volatility, and you can use it as an indicator that that it's in a certain range within your Z variable. It's more of just a graphical way of reading the surface. So when you rotate it, it's easier to read what you're doing. Now, in this case, it's volatility. And what's interesting here is time. I think time is this way. I think this is time here. Now, as time is going forward, this is the Lehman situation. This is when Lehman happened. So volatility was low, and then it started picking up. There was stress in the market, and then all of a sudden, the Lehman event happened. And then after the Lehman event, then volatility started going down. But then it spiked up again. But just within this data set, you had a spike in volatility, and then it drops down, which is very similar to what normally happens in a heteroscedastic process. So you can kind of read this in a way where, okay, volatility spiked, okay, volatility is going to go down. So it's almost a coincident indicator in a way where when you see volatility spike, then you can actually assume that volatility, if you're a volatility trader, that volatility is going to start dying down. So you can actually short volatility. Now, in here, this is where volatility surfacing, when it's in a low period relative to the data set, in a low period for volatility, a low period, then it's not a coincident indicator. What it is it's actually, there's a periodicity that if you look at many different window sizes of a volatility surface, you'll get a feel that as time goes on in a low period, that there is an increased probability of a spike in volatility. So usually what happens is the volatility spikes, it'll immediately come down, and then there's a low period, and then it'll spike back up. So, and as it stays in the low period, the CDF function actually increases the probability for the spike to happen. So low volatility does beget higher volatility eventually based on some normal periodicity signal. So it's not a coincident indicator when it's in a low period, but it is a coincident indicator when it's in the spike. That's when we read it as a volatility surface, but you could look at the surface in many different variables, and the dynamics of that variable, the dynamics of reading that surface is going to be slightly different because of the nature of the variables. You know, if I add this as price, time, and let's say correlation to an asset, you probably would not have heteroscedastic spikes like you would have in volatility surfaces. So that's what the colors are more of a representation to get an idea of what the range or region of the z-axis is. Now,
sorry, go ahead.
All right, so the next one, George says, how has Poseidon changed my trading? Poseidon has changed my trading. I use volatility surfaces, and when you look at the market with just price and time, and RSI, MACDs, yeah, they sometimes work, but if the MACD is crawling down, and your RSI looks like it's overbought, standard practice is to short the market, short whatever that is, right? But it may not be that strong of a signal. It may actually take a while for it to come down. And the price charts don't really show the real volatility that's going on. That was kind of the reason why I started wanting to graph things in 3D. And Brian and I have been talking about this stuff since probably February, maybe January. How to do this? Could this be done? Could this? How fast could it be? And it's been, a long journey to figure out how to do this. But it helps me by looking at volatility and understanding, because I do spread trading. When that spike is going to happen, it's going to change the spread dynamics. When there's not a lot of volatility, spread trading the oil or gas market, there's not a lot, nothing really happens. There's no money to be made. But if you understand the drift, or another way to say that is the momentum of the market, and that another volatile period is going to happen, then you can make money in the spread trade. You could use this that's how I use it. You can also use it with correlations for a portfolio to understand that when volatility does spike, how it will stress the market, how it will stress your portfolio, because when volatility is spiking, it'll change the correlation between your assets. So volatility correlations break down. Having a surface that shows you that dynamic gives you a better feel, a better visual tool to understand how your portfolio will be stressed relative to other assets within the portfolio. Much more than looking at just a price time curve. So that's how I use it. So how do you display spreads in energy futures with Poseidon? Well, I mean, I use this. How I use the surface, Steve, in spread trading, is that I do my spread trading in Thinkorswim, and then Poseidon on another screen. I have a lot of screens, right, for my computer trading. So one of my screens is the Poseidon surface, looking at it and reading it and determining if there's going to be a change in volatility, and also looking at the PDF and CDF functions of the actual drift. And when I do that, I look at my price chart that's showing the oil market, and I determine if I do spread trading where I buy the current contract and the next forward contract. So I'm doing like a calendar spread. So I might buy the forward contract and short the 1 month out contract, right? So based on reading the momentum of the trade and determining if there's going to be a spike, will help me add to the probability that there's going to be hopefully money to be made. So you want to be right with the momentum indicator and the prediction of the momentum, and then you also want you don't want to buy in the volatility. You want to buy outside the volatility, waiting for the volatility to happen. So that's the plan. Now, if you don't do spread trading and you just use this as an indicator, you could actually say, okay, if the drift is negative statistically and the volatility just spiked, then you might want to wait until the drift is still negative and that the volatility is about to spike and short the future without having a spread trade. That's another way to do it. But then within Poseidon, there's also going to be some 2D charting on the charting screen too that could show spreads. Now you could also, in theory, I haven't done it, but you could easily use one of the variables as the spread. So you could do volatility for Z, time for X, and actually the spread between the actual calendar spread in the Y-axis. And that would give you an indicator also. So there's a lot of ways to use hypercubes in the different permutations of a 3D or 4D system. Have you looked at Google Viz, our package, interface to Google Graph? Not nearly as advanced as Poseidon, but can graph 5 variables, time on a slide. No, I haven't looked at the Google Viz R package. I gravitate more to MATLAB. I'm not really an R person. I have R. I think a lot of people use it in academia, but I just think that MATLAB is just far more advanced than R or Python. But what is interesting about Google is the idea of the augmented reality. That's another thing that I haven't really done, but I mean, in theory, you could have augmented reality on a trading station, which is maybe an intermediate step to the whole virtual reality concept that I have.
There's 3 more questions, Paul.
So Steve said that is what I thought, directly indifferent in which of pairs is more or less volatile. Right. there's a lot of ways to use Poseidon. That's why I highly recommend people downloading it as, that do have Windows 7. I've had some people that have downloaded that had Windows 8 and it didn't work. There's a Java error that happens when they try to load it. But if you have Windows 7, it works well, and play around with it, and you'll just put it right next to the trading system that you're using, and you'll start noticing that you'll start noticing how to read the surface relative to your trading style. There isn't one specific way to read the surface, because the surface has a lot of data in it, and one type of trader might see something in the surface that another type of trader would not see. And it's, an option trader thinks things differently than a straight equity trader, right? Just buying on the spot market. A currency trader thinks a lot differently than an option trader. So, those different perspectives and the types of variables that are important to you in your trading it will give a certain unique way of looking at the surface. But the whole point of the surface is that there is more data in the price time curve that a normal price chart does not show, but it's in the price. It's kind of like the price is a shadow of multiple variables. I call it Plato's. I don't know if people know, but the concept of Plato's cave, where there's an image behind these people that are chained to a wall, and they see a projection of the image, and it's only a shadow in front of them. But there's all this other reality behind them that they can't see. Well, price is very similar to the Plato's cave. Price is just a shadow of something much more dynamic. And one way to see the dynamism of the market is not to look at the price action relative to time, but to look at other variables also, to see that dynamic of that particular asset. So price charts and models that only look at price and the movement of price, I think, aren't capturing fully what's going on. They're only capturing a shadow of it. So that's my take on how to use volatility surfaces, and it's not just volatility surfaces; it's surfaces in general. Yeah, Steve says, should give insight on new ways to think of strategies. Yeah, exactly. So the idea is, Poseidon would, help augment your particular trading style. And that's kind of part of the reason, not the whole sole reason, but part of the reason why Poseidon, I think, is a good tool next to the broker platform that you're using for trading. I'm curious with Steve, which broker platform he uses. If you could tell me, Steve. TradeStation, yeah. So, and TradeStation is a good platform, especially for algorithmic trading. But, the idea, is to have these surfaces that are being parameterized either statically, if that's the way you want to see them, or dynamically, if you want to see it in 4D, and at different window sizes. Then you would be able to go to your TradeStation, and it's like another indicator or another type of chart of data, and then you can place your trade that way. Yeah. Now with Poseidon, in terms of the spread idea, the idea is that you could put in two different contracts, and you would be able to see a 2D spread if you want to, on top of the 3D. Now in Thinkorswim, it does pretty good on spreads. I can just type in the two contracts, one minus the other, and it shows the actual change in the spread. And then in Thinkorswim you can put two different contracts on the same chart, and you can see if it's in backwardation or contango. That's for futures trading, for people that aren't familiar with those terms. So that's the development that I've been doing. Now it's been a journey, that's for sure. The idea that you'd be able to go into the different screens similar to a Bloomberg station, and look at different aspects of Poseidon, but the big meat and potatoes for Poseidon is going to be the quant trading tools in the charting, in the VR. These other screens you're going to get on a standard trading station. You can get equity information quotes and stuff on your standard station, or commodities, or government securities, or currency. What they're lacking is good quantitative tools that are at the PhD level, and charting tools that are similar to this using the hypercube method. So that's what I've. So if anyone else has some more questions, I'd be glad to answer them. If not, then we can call it a day. Does anyone have any more questions? Thank you. Thank you for attending. Appreciate it. And hopefully I'll be able soon to show the production product of Poseidon. Okay. Thank you very much for attending, everybody.
Yeah, thanks Paul for doing it.
Yep, no problem.
Thanks for everyone coming out. I'll stop the recording now. Good night all, yeah. Thanks.